what to sell, where to find out where to do these things, and where to send any questions that you have. That's about it. So that's what I'm going to cover in this video. But before we start, I need you to understand that this is the single most accurate and also simple to follow investing system in crypto. You've discovered an absolute hidden gem of crypto. Like, this system has not been made anywhere else. I designed this myself. It's based on 4 years of crypto experience, and it is genuinely the best investing algo out there. So when you watch this video, just know that you've stumbled across liquid gold, and you need to make sure you use this algo accordingly. It is the best on the market by far. So with all that hype out of the way, what is it actually for? So the Hunter, this algorithmic system is basically designed to make it incredibly simple to buy cryptos near the bottom and sell cryptos near the top. It works on 90% of coins in the market. Some coins it doesn't work on, but we can cover that in a later part. But basically, 90% of the coins in the market, it works incredibly well to buy the bottom and sell the top. And the concept of this algorithm is to simplify your crypto investing with a proven system that actually works and delivers results. That's basically it. So here we have a chart with the previous signals for Bitcoin. As you can see, there is 3 different colors. Yellow is a buy, green is a buy, red is a sell. As you can see, when the arrow points up, that's a buy. When the arrow points down, that is a sell. The green line and the red line, just ignore them. It's just to show you what the price has to go below or above to trigger a signal. But yeah, essentially buy, sell, buy, sell, buy, buy. Pretty simple, right? And this is just Bitcoin. But as I say in the next slide, buy signals are for any coin in the market. So when Bitcoin says buy here, that doesn't mean just buy Bitcoin. It means you can buy any coin in the market. Because when Bitcoin crashes, the whole market crashes, and you can buy anything on the dip because it's all bottoming at the same time, basically. However, there is some coins that don't follow Bitcoin, and it won't work on. But for pretty much every coin in the market, the bottom you buy, it will work on any coin. So this is what a buy signal actually looks like. You can see it says crypto buy signal, current Bitcoin price 42,000 at the time of the signal, current Ethereum price at the time of the signal, total market cap at the time of the signal. You can see the photo here. It shows you when, like a screenshot of the live chart when this signal was sent on the 9th in 2021, in the 9th month, on the 28th. And you can see that this was taken at 42,000. If we look back here, 42,000, it was literally sent at this bottom. So that this is this signal here, as you can see. And we have an example of a sell signal. So, sell signal, when it says Bitcoin take profit Hunter, is for Bitcoin plus some altcoins. It's not we're selling all our altcoins, we're getting out of the market. It is we're selling Bitcoin and we're taking some precautions on some altcoins. And please excuse the photo that didn't load. The photo didn't load because we had an error when the signal was sent. But the signal is still valid, it just doesn't have the photo attached with it. But as you can see, it says sell, take profit, and it says 67,000 for Bitcoin. So if you go back here, 67,000, that was this signal here. You can see it's a live signal, it's an actual signal. So, some signals will say altcoin take profit Hunter. If a signal says altcoin take profit Hunter, that is a signal for only altcoins. So it's not to sell Bitcoin, it's just altcoins. Because sometimes Bitcoin and altcoins do different things. Sometimes we only want to sell altcoins. It really depends what the market is telling us. So how much should I buy on a buy signal? Each buy signal equals 10 to 50% of the cash you have at the moment to put into crypto. How much should you sell? Each sell signal equals 20 to 60% of the amount of money you have in a crypto. Doesn't include stablecoins, it's just including selling, like, let's say your portfolio was Bitcoin and Ethereum and you had $10,000. If you sell 60%, you sell $6,000, basically. That's how it works. So do I buy and sell on every signal? No. I do not buy on every signal, I do not sell on every sell signal. I apply my own discretion to all signals, and I basically do what I think is best based on the situation. Because sometimes a bad signal's sent and I don't want to buy or I don't want to sell, and I will just ignore it. For example, This one here, I put in 10% of my portfolio, but I said to everyone, like, look, I don't know if this is the bottom. I'm not convinced. I'll buy a little bit because it's a buy signal, but I'm not buying much. So that's sort of the same as what I'm saying here. Not necessarily buying every signal. What if this goes against other professors' signals? Good question. Wonder who asked that. So I follow my own system and my own system only. If Michael and Adam and Luke, they're all bullish and my algo says to sell, I'm still going to sell if I think, based on my own opinion, that the market is going down. It doesn't matter what they think. If I think it's going down and my algo says it's going down with a signal to sell, then I will do it. Where should I ask questions about the algo? Ask the professor's chat is where you should ask. That's where all questions will be answered. How do I find out what you/the other professors are buying/selling on each signal? Well, everything I buy and sell on each signal will be posted in the Crypto General chat. So that's this one here. And that's basically it. So yeah, basically you go into the Crypto General chat. When a signal is sent, you'll see me talking in the chat. I'll say, buy a signal for Bitcoin. We're buying Bitcoin, Ethereum, Solana, whatever. That's what I'll be saying in the general chat. So it's pretty easy to follow.
This video is going to show you how to open an account with FTX and how to deposit fiat and Thank you.
Hey guys, how are we? So a new video here, and this one will be covering how to understand the Bitcoin and broader crypto markets. So to understand how the algo works, you need to understand how crypto works. So that's what I'm going to be breaking down here, because I want you all, at least the ones interested, who want to know why the algo does what it does and who wants like an understanding of how it works and why it was coded the way it was. I want you guys to understand how crypto works so that you can know why the algo was made, why it was. And that's what this video aims to cover, because there's a lot of different components that actually influence what the price of Bitcoin is, what the price of crypto is. And so I'm going to break them all down in this video, basically. So let me get my big video here out of the way. So why does Bitcoin move up and down like it does? The price action of Bitcoin that you can see happens for a particular reason. It's not random. And the reason is Bitcoin's short-term price action is driven by derivatives traders. That's what it's controlled and driven by. And whereas its long-term price is controlled by organic buyers of actual Bitcoin. So the degenerates on derivatives exchanges who degen, they don't control the long-term price. They just influence the short-term. But the people who buy actual Bitcoin and they lock it up and they put it in cold storage, those guys actually control the price of Bitcoin more so on the long term. And as you can see here, we've got an up, down, up, down, up, down. That's crypto. It goes up, it goes down, it goes up, it goes down. The trend of the long term is up because the organic buyers keep buying. The long-term trend of crypto is up. However, amongst the long-term trend, you have these short-term trends. These short-term trends are controlled by derivatives traders. So when you have this dump, that's derivatives, mostly. But the long-term trend is up. And as you can see on the right here, this is the actual Bitcoin chart. You can see you get sell signals, buy, sell, buy, sell, buy, sell, buy. So it's a ping pong. It's a ping pong with an upwards trend, right? Sell here, buy here, sell here, buy here. That's how it works. Short term, it's controlled by derivatives. Long term, it's controlled by the organic people the organic buyers, right? The ones who buy actual Bitcoin. So in other words, Bitcoin's price action can be summed up into two distinct driving forces. On a longer time frame, Bitcoin's price is driven by investor activity and its adoption curve. So that's about the amount of users, how valuable Bitcoin is to use and hold, as well as how developed the surrounding infrastructure is, giving that gives Bitcoin an underlying price floor. And the shorter time frame, as we said, is about derivatives traders. It's about which direction can the market move to liquidate the most amount of traders, basically. So there's another chart here. The blue line is the underlying price floor. It's what the price of Bitcoin is if you just take its true value. And the red line is Bitcoin from 2017 to 2020. And I've drawn like a rough sketch of what it did. And as you can see, this is Bitcoin deviating above and below its actual fair value. And that is the derivatives traders mostly. That's the derivative traders trend, because the traders, they create the short-term price action. So this lesson that I'm talking about here with the short-term and the long-term derivatives and the organic, that applies to all coins that have a derivatives market. So that's most coins, or most of the big coins. Smaller coins, they're mostly just driven by spot volume. They don't have derivatives where you can, 10x long a position. So yeah, this lesson, I know I'm covering Bitcoin, but I'm talking about most altcoins as well. So don't think I'm just talking about Bitcoin. So these are the terms you need to understand each and every one of these terms in order to be able to say you can understand why crypto does what it does. So we've got reflexivity, convexivity, elasticity. Changed up my drink. Volatility, momentum, liquidations, funding, sentiment, derivatives versus spot, on-chain data. So we're going to cover all of these. Most of these words you guys never really heard of or don't even know what I'm talking about. And that's why this tool's so good, because no one really talks about it. So let's get on to the next slide. This is the first three. So reflexivity, convexity, elasticity. So reflexivity, we're going to do all of these three in one. So these terms basically were coined, reflexivity was coined by George Soros, and it's the theory that a two-way feedback loop exists in which investor perceptions affect the market environment, which in turn changes the investor's perceptions. So to put it really simply, higher prices bring more people into the market, which brings higher prices, which brings more people into the market. So as you can see, we've got an example of XRP, right? So the XRP price increases, XRP's perception is positive. Oh, it's going up, it's probably a bull market, I need to buy. So people start buying. Fundamentals improve because there's more people using XRP. The fundamentals improve, which increases the price. The price is up, so more people buy because they think the price is going to go higher. They increase the fundamentals more. See, it's like a feedback loop, goes around and around. That's reflexivity, basically. It's a two-way feedback loop. And that also happens the other way, with lower prices, meaning less people buy, meaning the fundamentals decrease. It goes both ways. So, why does reflexivity occur? Reflexivity is foundational to the nature of Bitcoin and crypto as a whole, as no other asset class derives such a significant portion of its value from its own network effect. So the network effect is how many people use the network. And as markets are forward-looking, which means people try to predict what happens in the future, and they make actions now to prepare for the future, the market is every single second collectively deciding what the future adoption of Bitcoin will look like, right? So when you buy Bitcoin today, you're hoping that in the future it goes up in price. You're looking to the future. So market participants are forward-looking. You don't buy because the news came out today, you buy because the news is coming out later. And because Bitcoin's main use case is its ability to make money, it creates these two-way feedback loops. I mean, I guess there's four elements here, so maybe you could call it a four-way, of like a four-part feedback loop, I'm not sure. But we'll just call it two-way feedback loop for now. So this is another way of representing it. Price increases, the use case is validated, the price went up, more people buy because the price went up. More users, greater network effect, higher prices. It's just a continuous loop, right? Price up, more investors enter, which means the price up, which means more investors enter. It's pretty straightforward, right? Market participants have a terrible habit of approaching crypto with a herd mentality, i.e. following the herd to make investment decisions. This is why reflexivity and convexity exists. Most people only buy once they see it is safe to do so, and for most, a safe entry is already too late and leads to big losses. So the reason reflexivity works is because most people don't buy until they see the price go up. You should be buying when the price drops, but most people are too stupid and they buy when they see it going up and they FOMO in because they're emotional. Because we're all driven by the same emotions, and we most of us can't control our emotions, right? We go to McDonald's and eat fatty food. We don't go to the gym. We don't work hard on getting a business built so we don't have to work our job. We don't go to bed on time. We stay up late. We go on our phones too much. Most people in society are incredibly lazy and driven by their emotions. And so because of this, it becomes harder to be a profitable investor, because if you can't manage your emotions in other areas of life, how do you expect to do it when you've got money on the line, when your future is on the line? It's a lot harder in crypto. And so that's why it's actually easier to make money, because most people are terrible at crypto. Most people are shit at investing. So most people buy with the herd. They buy at the top when everyone else is buying and all the smart money's selling. So yeah, you should never try to buy when it's safe to do so. That's stupid. Crypto's price action is a lot like Newton's cradle. So, you guys have probably seen this before. The ball, I mean, I haven't got much room here to show you, but the ball comes here, it swings down, it hits the other balls, the other side comes up. And it's just a continuous like this, right? That's crypto. Except pulling the ball to the left is the price going up, and that's the price going down, price going up. So, as you saw back here, you can see price ping pongs, right? That's Newton's cradle. Back and forth, back and forth. That's sort of how crypto works, back and forth. And so that's just like another way to another metaphor to sort of visualize it. All right, derivatives, the fun part. Don't fall asleep on me. So, derivatives, this one you're going to actually understand. It's quite complex, but I'll make it simple. A derivative is a contract that you buy on an exchange that represents something else. So, a derivative is something you buy that derives its value from something else. If I want to own gold, but I don't want to have that fucking heavy piece of metal in my bedroom, I would buy a gold derivative. Because what the gold derivative does is it allows me to own the asset, the price exposure, right? I'm owning gold so that if the price goes up, I make money, but you don't have the asset exposure. I don't actually have to hold the asset. Same thing happens in Bitcoin. Some people don't want to hold actual Bitcoin, but they want to own the price exposure. So they'll buy a derivative of a Bitcoin on a derivatives exchange, and it's backed by actual Bitcoin, basically. So this photo here is pretty good. It just basically shows you why do derivatives exist. So imagine you're a wheat farmer and you've got $1 million of wheat on your property you're trying to sell. $1 million of wheat, that's a lot of fucking wheat. And it's going to take you 2 months to sell this wheat. And the price of wheat per kilo is really high at the moment. And you think the price of wheat's going to drop. If you can't sell all this $1 million of stock in the next week, you're scared that the price of wheat's going to drop and you're going to lose all these profits because you can't sell in time. So what this wheat producer can do is he can short a wheat derivative, which means he can sell a wheat derivative, meaning he doesn't actually own the wheat. But what that allows him to do is it allows him to sell his wheat in advance. So it's called shorting. What he's doing is he's betting on the price of wheat dropping. So if he wants to lock in today's price of wheat, what he could do is he could short $1 million of this wheat on the derivatives exchange while holding his $1 million of wheat. And so because he is $1 million betting it goes up because he owns wheat, and $1 million betting it goes down because he's shorted it, if the price of wheat drops 10%, he made a 10% profit from the short. He lost 10% owning the wheat, so it equals out. He doesn't actually lose or gain. So that's the advantage for the wheat producer. For the manufacturer might want more stock because he thinks the price is going up and he can't make it in time. So maybe he longs wheat to capture the upside. I don't know, something like that. So there's 2 types of exchanges in crypto: spot and derivatives. A spot exchange is where you buy actual Bitcoin. So Binance, Coinbase, FTX, you're buying actual coins. Derivatives exchanges are where you buy contracts of coins. So BitMEX, Bybit, Deribit, sorry. Those are the derivatives exchanges. On Binance and on FTX, you can still do derivatives trading, but they are mostly a spot exchange. They're mostly for people who want to buy and sell actual Bitcoins. And you can see all the other advantages there. I'm not going to go over them, but if you want to read them, go for it. All right, next concept. What is leverage? Leverage is using more money than you actually have to buy more or sell more of an asset that you wish to trade. So if I have, we've got an example here. If Joe Blow, has $100 in his Binance account, but he wants to buy $500 of Bitcoin, what he can do is he can turn his leverage slider, his leverage amount, to 5x, and that'll give him 5 times more money than he actually has to buy and sell. So he turns it to 5x, now he can buy $500 of Bitcoin, because 100 times 5 is 500. He now has 5 times more. So leverage is essentially borrowing money from an exchange in order to try and make a profit. There's 2 ways that you can use the leverage that you get. You can either long or short. So longing is buying to sell higher, as you can see on the left here. You just buy something and you sell it at a higher price. Shorting is you sell something and you buy it at a lower price. It's just literally the inverse. It's pretty simple. And funding, most important part here. You guys better listen up, because this one is tricky, but I really want you all to understand this if you've got this far. So, funding is a feature of only derivatives exchanges, not spot exchanges, only derivatives exchanges, such as BitMEX, Bybit, etc. Funding is related to the premium or discount between the mark price and the index price. Now you're probably like, what the fuck did he just say? So let me explain. You'll understand it by the end of this. Funding serves as a tool to disincentivize the market from entering positions which would cause the mark price to run away from the index price, or vice versa. So let's look at this photo over here. Actually, no, let's read the rest of this first. So the mark price is the price of Bitcoin on the actual derivatives exchange. So if I want to buy Bitcoin on BitMEX, the mark price is the price that Bitcoin is trading at on BitMEX. The index price is the average price of Bitcoin across all other major exchanges. So like Binance, Coinbase, etc. The index price is a separate calculation. So there's 2 prices here, mark and index. Mark is the BitMEX. So there's an example here, the supermarket. The mark price is the price of the good in the supermarket, and the index price is the average price of that same product in every other supermarket. So when you walk into a supermarket, you pay the mark price. However, you can still determine the average price of that product from all the other stores. So that's sort of that's a good metaphor. And here's a photo here to sort of display why you don't want the mark price above the index price. If everyone is trying to buy, we're going to the moon, everyone's here to buy, and no one's here to sell, might be a good time to lock in profits. It causes instability in the market, because if everyone wants to do this, it's going to be hard for them, because there's not many people who will do this. A market is only a market because you have 2 people, a buyer and a seller. If everyone wants to buy, who is going to sell to them? There's going to be no one to sell to them. So you need an even amount of buyers and sellers to keep the price, the mark price and the index price fair. Because maybe on BitMEX, there is way more people trying to buy than on all the index price exchanges. So let's say the index is Binance and Coinbase and FTX, these 3 exchanges. And then the mark price is BitMEX. If everyone on BitMEX is trying to buy, and now the mark price is higher, BitMEX is trading at a different price to all these other exchanges. And that's instability. They don't want that instability. They want all the prices to be the same on all the exchanges, because stability is key. Stability is really important. And so funding, if the prices are different, they have a funding tool, which we'll explain in a second, which helps to rebalance this. So there is two ways to measure funding. It's either positive or negative. Positive means that longs pay shorts for the privilege to be long. So this part here, this first bit, it's going to take a second for your head to understand because it's like multiple mechanics sort of at play here. But basically, when the funding is positive, longs pay shorts. So buyers pay sellers for the privilege to be buying. When funding is negative, shorts pay longs, so it's the inverse. What this feature does is it disincentivizes traders from market buying positions in the direction that would further distance the mark price from the index price. So let's say the mark price of Bitcoin is 10,000 and the index price of Bitcoin is 9,900. The mark price is above the index price, which means there's positive funding. And the positive funding is going to make people on the BitMEX exchange have to pay a fee to the people who are shorting, because they don't want more buyers on BitMEX because the price on BitMEX is higher than the price on the other exchanges, the index. And so I know this is probably getting complex for you guys, but bear with me. So the funding payment is the payment the longs have to pay to the shorts. Positive funding equals everyone's buying. Negative funding equals everyone is selling. Obviously, it's not everyone, but it's just an exaggeration to help explain. So the mark price above the index price means that people on BitMEX are buying more than people on the other exchanges. And so to make the market index price even, what they do is on BitMEX, they charge the people who are buying a fee for the privilege to be buying. And that means that it becomes more expensive to be buying and less people are going to buy. If less people are buying, the price comes down. If the price comes down, it's even. So the funding calculation basically is calculated every 8 hours. And funding is typically measured between a range of 0 to 0.2%. It doesn't really go more than that, generally speaking. So yeah, as you can see here in this example, funding is positive at 0.05%. What that means is that every 8 hours, 0.05% of a position that is long is going to get taken away and given to someone who is short, who holds that position open. So if it stays at this rate, every 8 hours, that's the percent that this person will lose who's in a long. So traders who are long are now incentivized to close those positions, which helps equalize mark price and index prices by providing sell pressure, right? They're trying to even shit out. And also, traders are also incentivized to go short and collect funding, which further increases sell pressure. So what someone on this exchange might do is they might short Bitcoin on BitMEX where the mark price is higher, collect the funding, and they might long on another exchange that isn't derivatives like Coinbase an equal amount so that they just collect the funding amount. Because imagine if you short Bitcoin at 11,000 on BitMEX and you long Bitcoin at 10,000 on Coinbase, and you're hoping that the prices even out, you can collect the difference because you shorted at 11, it drops to 10, you made $1,000 profit. The price is still at 10, so you don't lose anything here. So you made a profit, right? And also, you were being paid to be short. So you made the $1,000, and you also made a percent of the longs that had to pay you because they had to pay for the privilege to be long. So that's a way that you can make money, and it's a way to stabilize it. Here's an exemplar. This is a really weird exemplar. Imagine David owns a bakery. And in this bakery, this yellow fucking muffin, everyone keeps buying it. And this brown muffin, no one's buying it because it looks like poo, for example. It looks bad, right? They like this yellow one. But David, he wants stability with his stock. He wants there to be an even amount of brown and an even amount of yellow muffins. So what David does is he's come up with this genius idea. This genius idea he's made is done to incentivize people to buy brown muffins and to disincentivize people to buy the yellow. So what he does is he says, anyone who buys a yellow muffin, they have a 10% penalty. And anyone who buys the brown muffin gets a 10% discount. And what he does is if someone buys the yellow muffin, that 10% is given in the form of a discount to the brown muffin buyer. And that way he's able to even out the supply of his different products by making certain products temporarily more expensive and certain products temporarily cheaper. And that way he can bring stability to his stock. Same with these exchanges. They don't want their exchange to be more expensive than another exchange. They want it to be even, because that's how a fair market trades. So David has created a system to incentivize brown muffin buyers and disincentivize yellow muffin buyers in order to bring stability to his stock. Derivatives exchanges do the same. They've created a system called funding to incentivize/disincentivize longing/shorting depending on which side needs support in order to bring stability to its exchange price. I hope that makes sense. So how is this data useful? Why do we need to know what the prices are on different exchanges? So funding shows us which direction the average market participant thinks price is going. So if I own BitMEX, the exchange where all the degenerate traders go, I know for a fact that they're all losing, 90% of them are losing money, right? So if 90% of a group of people lose money from what they're doing, if I just do the opposite of what they do, I can make money, right? If they're losing from what they do, I just do the opposite and I'll consistently make money because they consistently lose money, right? That's how it works. So if on this exchange BitMEX, the mark price goes above the index price, which means that all the idiots on BitMEX are buying and they're pushing the mark price up, that means there's positive funding. If funding's positive, it means that on BitMEX, the buyers are actually they're very bullish. They think the price is going up, so they're happy to pay a little bit more for the privilege to be long, right? So they're bullish. But if these people are wrong, then shouldn't I be doing the opposite and selling? So when funding is positive generally, you want to be selling because you don't want to be buying when these dumb people are buying because they're wrong on average. You want to be doing the opposite of them to be right on average. So the funding is a calculation based upon all the traders on the exchange, right? So if there's 100,000 people on BitMEX, the funding is based on what 100,000 people are doing. So the mantra of trading is, in investing, buy when others are fearful and sell when others are greedy. So if based off this big sample size, the average person is really bullish because the funding's high, then you need to sell when others are greedy because they're paying more money for the privilege to be buying because they think the price is going up really bad because they're emotional. So that's why we need to do the opposite, and that's why funding is a sentiment tool. Because funding represents what that trader is thinking and feeling. If they're happy to pay 1%, a 1% fee every 8 hours to just have the privilege to be long, they must be pretty bullish and they must be pretty emotionally greedy. I hope you guys can sort of see where I'm getting here. So, to summarize, we basically trade against the herd of derivatives retail traders. Their collective sentiment is seen through funding, and as mentioned in the overview of Bitcoin price action previously, short-term price action moves in the direction that liquidates the largest amount of traders. So this should be really obvious for you guys now. I hope it's really obvious. If funding is positive, these degens are bullish. If they're bullish, the price going down is going to make them lose money. If the direction of Bitcoin's price is moving based upon which way can make the most amount of people lose money, if everyone thinks the price is going up, the price is going to go down because that's going to make them lose money. So that's basically how it works. So applying funding. Here we have funding data on a chart. Green is positive funding. Here, positive, 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 positive. Red is negative funding. Negative, negative, negative. As you can see, Negative funding, that was the bottom, that was the Corona crash. Negative funding, that was the bottom. Negative funding, that was the bottom. Negative, bottom, negative, bottom. Pretty obvious, right? Negative funding is the opposite of positive. So positive here, that's the top. Positive here, this didn't work very well, but we have a reason for that. Not sure if I'll cover that in this video, but there's a reason. But as you can see here, positive funding, the top, positive funding, the top. Pretty accurate, right? It's pretty decent, 7 out of 8. I guess maybe it's 7 out of 9, something like 8 out of 9 or something. Pretty good. So this is the funding data, that's the price. As you can see, it's decently accurate. And that's how funding works. It represents the sentiment. See how big this spike is? That means that traders were really bearish because they were willing to pay 0.3% every 8 hours. So they were paying 1% every day of their position for the privilege of being short at the bottom. So what does that mean? That means they were bearish, which means that it's the bottom because they're bearish, because they're dumb and they lose money. So let's bring this down. What makes funding unique from every other market analysis tool? Funding doesn't suffer from alpha decay. It doesn't matter how many people in crypto look at the funding data. If funding is negative, traders are bearish. If funding is positive, traders are bullish. It doesn't matter how many look at it because the data cannot be manipulated. It is what it is. Funding can never be a trap. There's never a universe where, oh, the funding's been positive for 3 weeks, it must be the top. Oh, it went higher. No, it doesn't happen, no. If funding is positive like that, and you can see the market is overextended, it's the top. You can't manipulate that. It's too big of a tool that you could even get a chance to try and manipulate it. Funding is a pure and authentic measure of future expected price performance. So obviously if funding's positive and traders are paying to be long, they must think the price is going up in the future because they're thinking they're going to make a profit for sure. So you can obviously use that as an authentic way to see what the market thinks is going to happen. Funding is the primary source of social consensus on whether Bitcoin is perceived to be going up or down. Now I'm going to add one more note here. Funding occurs on any altcoin with on a derivatives exchange that has the derivatives contracts. So I say Bitcoin here, but I refer to all coins. All right, here's some tweets from the guy who basically made me find funding. So funding rates are all you need to trade successfully. Daily time frame, not hourly, it's elastic. See, elastic keyword. And it's all you need to trade successfully, literally. No, bro, you don't understand. Actually, no, I won't read that one yet. You since 2018. Yes, let me get onto the new flavor of the month. Ah, yes, let me not share this alpha with anyone. Oh no, I don't want it to get diluted. Me since 2018. Funding, 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 guys, funding, use funding. So what he's trying to say there is, doesn't suffer from alpha decay. It doesn't matter how many people look at it, how many people doesn't matter, it still works. Whereas everyone else is trying to hide the alpha because it might get diluted. Funding, it can't be diluted. It doesn't matter. You can't dilute funding, and it's the only tool, it's the only data method that actually works like that. And there's not a single other tool that does that. So what's the last one here? People should remember that entries are the result of price entry plus funding time since entry, not just entry. It's why high funding is only a major bearish factor when the price has consolidated in the range for long enough to give bulls a much higher liquidation than before. So what he's trying to say there, I won't go too much into depth, but he's trying to say that the reason that when you have like 3 weeks of positive funding in a row, that's the top, is because if you entered a long and your liquidation price was 10% lower, but you just paid 3 weeks of funding and the funding was like 4% of your position, your liquidation price is now like 4% higher because you just had to pay a lot of your collateral for the privilege to be long. So that's all he's trying to say there. But these are just different angles, and the main one is the top one here. Funding rates are all you really need to trade successfully. It's the most important tool in crypto. All right, liquidation, the fun stuff. Let's move this over here. So a liquidation is a forced closure of a position when you run out of money to hold the position open. And a liquidation cascade is a liquidation causing someone else's liquidation, causing someone else's liquidation continuously, like an avalanche sort of thing. Similar concept. It's like a cascade. Liquidations can occur to both longs and shorts, so happens both ways, up and down. Because these orders are forced orders and they're not like intentional, you tend to see short-term mean reversion after nukes. So if price nukes 10% on a liquidation, it's very common to see price go back up 10% the next day, because it wasn't an informed order. They didn't want the price to drop. It just happened that they got liquidated, which caused the short-term price drop. And next concept, sentiment. Sentiment is very similar to funding, but sentiment is like the direct way of looking at the emotions. So in crypto, in a market, the sentiment is always repeating. It's the same for every market. It's the same for every market cycle. 100 years ago, the exact same sentiment was occurring as today. The reason being, humans all are driven by the same emotions, and we all have the same programming, right? You feel greed when you, when you make heaps of money, right? You feel FOMO when you see your friends overseas. You feel fear when someone came up to you trying to fight. These are just interpersonal feelings and emotions that we all feel because we're all driven by the same coding. And so in a market, if every person has a foundational level of the same characteristics that drive their decision making, e.g. their emotion, sentiment, you find recurring patterns of the same emotions. So at the top of the market, everyone's euphoria. Oh my God, look at all this money I've made. I'm rich. I finally don't have to be a slave anymore in my job. And then they lose all their money. Despondency, depression, capitulation. I'm going to have to work at McDonald's forever. I'm going to have to pick up a second job. You know, that's despondency and depression and capitulation. And this happens in all markets throughout all of history. Even back when they were trading, I don't even know, like when they had physical trading venues, it was the same emotional cycles. Why is sentiment important? Well, one of the driving coding pieces in every human is the desire to follow the herd. The reason we have an instinctual desire to follow herds is because in order for us to become top of the food chain, it required teamwork and it required organization of groups of us together to work together to build shit, right? If you were a lone human in the wild, you would be slaughtered by the lions, the fucking tigers, you would be destroyed. If you were a part of a clan of 10 people with 2 up always at one time during the night keeping watch, and 5 people fighting a lion to get dinner for everyone, you would survive. You would be fine. So there's hardwired desire for you to seek a herd, to seek a group. And this is why traders go wrong, because if you follow the herd in crypto, you're following the wrong people. You need to buy before others are buying and sell before others are selling. If you follow the herd and you buy when everyone's buying, you're going to run out of new people to buy your bags so that you can sell in a profit. So accurate sentiment analysis is basically, because of this, an almost guaranteed way to make money and to spider bottom and sell the top. If you know in a really easy way where people are euphoric, where people are depressed, you just sell at the top, buy at the bottom. It's so fucking simple. The hard part is getting accurate sentiment analysis, but this is where funding comes in, because funding is the most accurate sentiment analysis around. Little tip right there. So humans never change. And if you can recognize what euphoria feels like and what capitulation feels like, you will always make money regardless of the market, regardless of when. You could be a profitable investor for the rest of your life using purely sentiment. Why I don't use on-chain tools. So, as you can see here, Willy Woo said derivatives markets and on-chain investor movements are 2 different systems. So derivatives is referring to funding, and on-chain he's referring to like the actual data that they take from the Bitcoin blockchain. And one controls the short-term price, the other controls the long-term price. So derivatives short-term, on-chain long-term. And what have we got here? Why would that activity in new participants, actually we'll read here, because spot purchases are insignificant next to derivatives volume. Derivatives set the price, spot purchasing impacts organic value, which is camouflaged in the short term under derivatives strategic games that traders play. So what he basically said is that if you want to know where Bitcoin is in 5 years, look at on-chain. If you want to know where to buy the bottom, use derivatives data. So that's why I don't use on-chain, because I don't give a shit what Bitcoin's doing in 5 years. And even if I did care, it takes about 10 minutes of me looking at a chart to find this out, and then I'm done. I don't need to look at it again. But what I do want to do is I want to buy the bottom and I want to sell the top, because I'm here to make money. You know, Bitcoin's cool and all. If it goes up, great. But I can make money even if it goes up, down, sideways. I don't really care. And that's why I don't use on-chain tools. And that looks like the end of the video. So I hope that was not too much information for you guys to take in. But yeah, we've got another really good video coming up after this. Thank you. Alright, so in this video we'll be going over understanding the Telegram rooms and signals, because I wasn't actually going to make a video on this, but a lot of guys were getting confused and I didn't understand, but clearly it's a little bit complex using the Telegram app. Some people don't know how to use it, so yeah, we're going to be covering how to actually do that in this video and how it all works. So there's two rooms in what you've just paid for access to. It is Dan's Hunter Algorithms and Dan's Hunter Algorithms chat. So when I send you the message to join, you're getting sent access to the left, on my left. I assume it's on your left as well. It's called Dan's Hunter Algorithms. That group you get sent, it just has the signals, any announcements regarding anything related, and also all the educational content you'll find in there. The second room is purely for discussions, Q&As, and for guidance on what Zane and Zane is my developer / engineer, in case you're wondering, guidance on what Zane and I are doing for each signal. So let's say, as a case study, there's a buy signal. The buy signal is going to get sent here, and if you want to find out what exactly we're going to be buying, you need to be in the chat, because the chat is where I'm going to be posting updates for what I'm actually doing. So it's pretty simple, really. If you ever confused, like, why is the main room messy? Like, a lot of guys were like, why is the main chat messy? Like, there's no signals room. Signals room's right here. Like, it exists, you just couldn't find it. So that's the signals room, that's the chat room. Very simple, only 2 rooms at the moment. If we add more in the future, it'd only be to make it even more separated and easy to follow. If I was to change it in the future, it would be a signals room, a room purely for guidance on what Zane and I are buying, and then another room for the chat. But we're not doing that, it's just these 2 at the moment. So, pinning the chats. If you have 0 chats pinned in your Telegram, you absolutely need to pin these 2 chats. Otherwise, you're going to lose them amongst the sea of shitty Telegram groups that you guys are in. That was a joke, obviously some of them are probably good. But there's a lot of shitty Telegram groups that I'm in, at least, that just... I haven't left those groups yet, but they just clog up your feed, right? So what you need to do is you need to right click on the channel that you want to add and then press pin. Same for both of them. I recommend pinning both of them right to the top. That way you'll see any signals and you'll see any chats, and it just keeps the important stuff at the top, right? Because this is the important room. You paid for access, you may as well make it easy for yourself to keep up to date with everything. Because I know you guys are busy. It's designed to be a low time requirement thing. Put it at the top of your chat so it's easy to follow. Okay, so here's an exemplar. On January 23rd, we got a buy signal. I'm in the way again. Let's move me over. On January... this mouse is in the way. Hold up. On January 23rd, we got a buy signal. As you can see, $35,000 Bitcoin, $2,412 Ethereum, and $1.6 trillion market cap. As you can see, that's a live photo of the price. It was right at literally the exact bottom, right? 2, I said to buy 40% of the cash into Ethereum, Bitcoin, XDB, Sol. So update after this signal, you can see it's the chat group versus the normal group. The chat group's here. Buying 1, 2, 3, 4, 40% of the portfolio. So pretty easy to follow, right? You just read the chart. Step 3, from the entry, which was here, XDB went up 50% in, how long was that? 2 weeks. It's dropped down quite a lot now. At the time of this screenshot, which was just today, I think it was, or the other day, it was a 24% profit. So yeah, you could, there was no sell signal, so I didn't tell you to sell. So if you held, you haven't made as much profit, but yeah, it literally went up about, depending on where you bought, if it was here or down here, you made 50 to 60% if you sold towards the top. But I'm still holding. I think this coin that I bought here, XDB, is a long-term hold, so I'm fine with that. And the others are up 5 to 15% profit, depending on which one you're looking at. So yeah, that's an explanation of how it works, really. It's pretty simple, right? You get a signal, you read the chat for what to buy, or you can buy whatever you want. You don't have to listen to me. I'm just posting what I'm doing. And also keep in mind, this isn't financial advice. This is purely just to explain what I'm doing and to show you and to teach you. But you should do whatever you personally think you should do, and don't purely base it off what I'm doing. And yeah, that's the end of this one. Really short and brief. It's just an explanation of how to actually follow the signals. So hope that makes sense, and cheers. All right, dispelling the myths around algorithms and bots. So this one's really important because, especially for the experienced guys, there's a very subtle hesitancy and skepticism around algorithms and bots. Because I will be honest, almost all of them are terrible, absolutely atrocious. And they're not actually based on real data which actually impacts markets. It's just a back-tested series of parameters which they've found a combination which worked during a time frame which they can use to sell to uninformed investors and traders, and unfortunately end up losing a lot of money on, getting burnt, who then write off algorithms and bots as a whole. It's a real shame because the system we've designed is based on real data that actually works. It's actually made people money. The back tests are good, but the forward tests are actually better, and it's actually legit. So this video I want to just go over getting rid of all the bullshit around algorithms and bots and making it really clear that this is a legit system. So let me move myself. Back testing versus forward testing. The way that a scammer can trick you into thinking that his algorithm is good is by creating a back test and changing the parameters to make it look really accurate and then selling you based on the back test. You should never trust a system purely based off its back test. You need to find out, did it actually work from people implementing a live signal? If it did, great. But no one is going to show you that. No one shows you that shit because most of people with algorithms and bots and whatnot, they're all scamming you mostly. So if you can find a system that actually shows you forward tested results that their clients are getting, not even clients, that they're getting themselves, then you're safe to say you've very likely come across a system that you should be using. So backtesting means little to nothing because the markets are always changing and a system needs to work today, the only time profits that are able to be made. Who cares if a system worked 6 months ago because the market's different? Doesn't matter. So anyone can backtest a random set of variables and make a seemingly accurate system, right? 99% of algos are based on shitty systems and parameters, and thus need forward testing to prove validity and relevance to how a market actually functions. So that's basically what I just said before. You need to forward test a system to see if it's actually a valid set of parameters which will actually work. Real data versus fake data. And let me cover back here one more thing. So the beauty of this algorithmic system is, and the beauty of you being here today, is that we've actually forward tested it for 8 months. We have 8 months of live signals, and the accuracy, the profits people made have been great. So we've forward tested. You can see the results from the charts from the previous videos that you've seen. You see that it works. So that's why this is a more trustworthy system, because we're showing you real results that people actually got, signals that people actually got. You can backtest all the signals and see them there. So that's one thing I'll add that's great about this system. Real data versus fake data. Excuse the wind if you can hear it. Real data versus fake data. As you've seen, funding is real data that actually impacts markets. Funding is a real data source that is actually impactful on the market. And 95% of algorithms work like the one pictured below. And I made this when I was 19, when I was just being an idiot. As you can see, January 2019. That was 1 year after I got into crypto, basically. And this system here is not based on real data. It's based on fake data that doesn't actually really impact on markets. So what I did was here, I took 2 moving averages, and I said, when this moving average crosses above this one, you buy, and then when it crosses below, I'll switch it around. When it crosses below, you sell. As you can see the yellow and the red line. And in a back test, wow, you took 6 trades, 5 wins, 1 loss. You started with $1,000. You now got 33 grand. Wow, this is such a great system. It's garbage. It's not real data. Just because the line's here doesn't really mean shit. Like, it doesn't really mean anything. Like, why does the price matter? Why would you follow a system that measures like a moving average? It doesn't really matter. Like, moving average crossovers are the first algorithmic system that people do generally when they make an algo, and it is the least reliable one. If it was that easy, everyone would be making money from it. So, why Verdan's Profit Hunter system is reliable? So, based on real data, I've said that about 100 times, that actually impacts markets. It's ultimately a sentiment analysis tool, and sentiment is the main impacting force on crypto. The perception of what people think is going to happen is super important, and crypto is really reflexive because the sentiment is super varied. People are either incredibly bearish or incredibly bullish on the future. Crypto is a very emotionally driven market because crypto is predominantly retail investors and at that new retail investors, and they're very emotional with their investing, right? Buying high, selling low. Jaw's getting sore. So the algo, this is one of the best parts. The Hunter algorithm system does not suffer from alpha decay, which means the edge doesn't disappear. So in investing in financial markets, having alpha is like having a piece of information over the rest of the market that is giving you an edge over everyone else in the market and allowing you to know something that will make you money that others don't. So the alpha of funding is we know where people are scared and we know where they're greedy, and we can use that to go against them. So the alpha doesn't decay because if funding is negative, people are bearish. There is no scenario where funding is negative and people are bullish as a whole. Never, it doesn't happen. It doesn't actually exist. So if funding is negative, people are bearish. And it doesn't matter how many people look at that piece of data, it is accurate, reliable, and it is actually what is going to affect the market. So the system is based on 2 to 3 years of deep research on one tool, which is funding. Not 5 hours messing around with PineScript code. And PineScript is the TradingView coding language, I guess you'd call it, that you use to design the algorithms there. So yeah, it's based on years of research, not just me messing around, adding random moving averages to a chart. Running out of room here. Where am I going to put myself? Can I make it smaller? No. So, do the algorithms repaint signals? Short answer, no. Long answer, repainting is the process of a signal being repainted. So imagine you go in the Telegram chat and you see a buy signal come up, and then the buy signal disappears, and then it pops up again, and it disappears, and then it becomes a sell signal. That's repainting. because repainting is a signal being sent, the data changing, and the signal being taken out because the data's changed. That's unreliable, because if you buy and it changes and you have to sell, it's annoying. Like that shouldn't happen with an investing algorithm. So repainting, the short answer is no, it doesn't occur. If all the parameters are met, a signal is sent for the system on the daily open of a candle. So the parameters are based upon the information stored inside the prior daily candle. Because that candle is already finished, the information is set in stone. So I think there's a photo here. If we look here, you can see the blue and the white candle. When we close this blue candle, it closes here and it opens here. The signal is sent here at the open. So the opening candle, if your signal is sent, it's because this candle had the parameters for a buy signal. So this green line, as you can see, it's the green line that you saw prior. When price goes below, that's the parameters met for a buy signal. So as you can see, the daily candle closed here, opened here, signal sent there, based on the already determined information. Now, with that said, during the calculation process of a signal, it is advised to wait 10 to 15 seconds after the daily open to make sure all the information has been received. So in the process of sending the daily candle information from the previous day, it takes 15 seconds to get all the information. So if the information is sent and a signal is sent, wait 15 seconds just for the remainder of the information to come through, and then it's worthy. So there's a 15-second repaint period, and then it's fine. So that's the simple way to put it. And yeah, that's the video on why this system is accurate and dispelling the myths on algorithms and bots. So hope you enjoy. Alright, next video is the mindset you need for success with this system that you're using here. So let me just shrink myself before we even get started. Don't want my head in the way again. So, the mindset for success. Mindset is really, really important. It doesn't matter how good your system is. It doesn't matter who you listen to. It doesn't matter any of this other stuff if your mind is not in the right place to pull the trigger and actually buy on an exchange and sell on the exchange. At the end of the day, you only make a profit if you buy and if you sell. All the rest doesn't matter unless you're actually implementing it. So mindset is really key. So you're here today because you want to improve your investing. You're not happy with what you've made so far. You want to make more money. You've decided to purchase this system because you see that it works, you see that others have got results, you see that it's based on real data, and you see that it would make you more money than you would have if you would have used the system from when it was designed, or even if you even had it years ago if it existed. So data speaks, listen to it. When this algorithm is telling you to buy, it's telling you to buy because of a reason. It's a very specific reason, and the reason is that the data is telling you that the market is bearish because of what we've talked about previously about funding, about sentiment, about derivatives, and also because the price is a certain percent below the moving averages, which is another point that we covered earlier. And because those two parameters are being met, it means that the market is at a point where it is undervalued or overvalued based off what has happened previously. And buying and selling at the regions it says to buy and sell, based on this data, is based off the back tests and the forward tests, going to give you more crypto returns than whatever other strategy that you're implementing, because that's why you're here today. So if this system brought more returns than you did, it's smart to follow it into the future, right? So if you look at your portfolio performance over the past year, right, and you made 200%, and you look at the algo, and the algo gave you 400 or 500%, there is not really much reason for you to continue using the system that you used because it is the inferior system, right? You're better off using the system, which gets you better returns. So you're here for a reason. It's making you more money. It's making others more money. You should probably try to implement it. And I know you're going to think when you see signals, oh, it's going to go lower. My gut's telling me it's going lower. Oh, no, I'm not going to sell here. I'm a long-term investor. Yeah, long-term invest that portfolio when it goes down 50%, right? Yeah, you need to try to follow the system. And I think some form of long-term investing is great. I don't sell everything on a signal. I don't buy everything on a signal. But if you're not at least taking some profits and buying some when the signal triggers, then you're doing something wrong. Think about it this way. When a buy signal is triggered, there is a number above zero of how much money you're willing to put in. Maybe it's $10, maybe it's $100, maybe it's $1,000, $10,000, $100,000. There is a number above zero that you would be comfortable putting in based off this algorithm. So if you get a signal and it tells you to buy and you don't even put a single dollar in, you are just being lazy, because there is an amount, a dollar amount, that you would put into crypto when this signal triggers. Maybe it's only $5, but you put it in, right? So you need to put at least some in. And this is the same argument that I would use to people, my friends, family, who wouldn't invest in crypto. They say it's too risky, blah, blah, blah. I tell them, there is a number above zero that you would be comfortable risking in crypto. Whether it's $5, $10, the same logic applies, right? You would not be afraid of risking $5 in crypto if you're comfortable in a first world country, right? So that makes sense that there's a number above zero and below maybe a certain amount where you would be happy to put it in. So keep that in mind. Each signal you should at least do something. Take at least some form of action on every signal that I tell everyone that I'm acting on as well. So lack of signals is a good thing. 90%, oh sorry, we've missed one here. I trust the system over my own opinion, so shouldn't you do the same? Yeah, so when I use the algorithms and it tells me to buy, it doesn't matter if I'm not bullish, it doesn't matter if I think we're going lower, I always put some in. I always buy a bit. Even on that signal back when we're at 50k-ish, I still put a little bit in. I said, all right guys, my cash that I've got, I'm putting 10% in. And I wasn't confident on it being a bottom, so I didn't put a lot in, but I did always buy some. That's what I say, always buy or always sell some. So I trust the system over my own opinion, so you should probably do something similar. Now, a lack of signals is actually a good thing because 90% of the money is made in 10% of the time. Most of the time in crypto, we're just going in this middle choppy range. We're not really doing much, right? It's only 10% of the time where we really have a strong deviation down or a strong deviation up, or an area where it's worth buying or an area where it's worth selling. 90% of the time, you should not be buying or selling because it's not actually a time where you have an edge in the market or where the market is at an extreme, which is a high likelihood of making you a profit if you buy and sell. Right? That's one of my biggest problems, and probably one of you guys' biggest problems, is when you have new cash and you put it into crypto, you don't have the patience to put it in at the right time, and so you end up just buying it at random prices. And you see these big crashes, and you think to yourself, oh, I should have bought on the crash. That's a common problem that I've even experienced. So the algo helps me fix this. So fight the urges to buy/sell daily. I'm not here to teach you how to day trade. I'm not here to facilitate gambling. Absolutely not. That's not what I'm here for. I'm here to give you guys a foolproof, simple system to improve your crypto returns dramatically with as little as 1 hour per month of time spent buying and selling on the exchange when you get a signal. It's that simple. That's what I'm here to do. I'm here to make you more money, help reduce the emotional and time burden of crypto, and make it very simple for you to make money. It doesn't matter if you know about crypto, if you don't, anyone could make money using this system. It's very, very simple. So if you're going to pay for my investing system, you may as well follow it. And you're here for a reason. So we basically covered those points here. If you're going to pay for a system, you may as well use it. You're here for a reason. You're here because you want to make more money, you may as well implement it. Taking action is 80% of the work. So a lot of you that I've spoken to, when we get a buy signal that's really good or a sell signal that's really good, you don't actually take action. and you're not actually buying or selling. And this is a really big problem because taking action is 80% of the work. Finding the best algo, learning about the best algo, having money ready to buy is only 20% of making money. 80% is pressing the buy button, which takes you 1 minute, but it's 80% because it's very important and everyone messes it up. So you can have the best investment system in the world, but if your mindset isn't right, you're still going to lose money. So you need to develop systems that allow you to take action on a signal when the time comes. So here's a system. I'm giving you guys a system here. The Investment Manifesto. I want you to write a crypto investing manifesto with the following. The goal of your crypto investing. So how much do you want to make? What do you want to achieve from crypto? Why are you in crypto? What's your goals? Are you trying to achieve financial freedom? Do you want to buy an island and not talk to humans for the rest of your life and just live isolated? Do you want to just party and travel the world? And what do you want to? Why are you in crypto? The time frame of this goal. How soon do you want to achieve this? Are you just looking to get rich by retirement? Are you looking to get rich next year? And the actions you will need to take to achieve this. So what are you actually going to have to do to achieve this goal? What's the plan? Are you going to be following this system? Are you going to be focusing on increasing income and just using the algo when it signals, triggers a signal? Are you going to do more NFT, active investing? What are you going to do? And these last two are the most important. So how will you hold yourself accountable to follow the Hunter Algo system? How are you going to make sure that you follow this system? You're going to have to brainstorm and think about your unique situation. What are some systems, strategies, methods, processes, whatever word you want to use, that you can implement to make sure that you act on a signal? And a list of your 3 biggest investing challenges and how you'll overcome them. So everyone has weaknesses with their investing. And to overcome them, you need to first identify them and then create a plan to beat them and then implement the plan. So, for example, one of my biggest investing challenges was patience. So in order to improve my patience, I might choose to meditate 10 minutes every day, for example, to help improve my patience, my ability to stay calm, and etc. Another I guess you could call it idea that I could use is that maybe I set a rule where before every time I buy and sell, I have to watch a video filmed by me talking about, are you making a good decision? Should you buy? Should you sell? Making me second guess. So when you get a buy signal, maybe have a video you have to watch when a signal triggers of you talking about holding yourself accountable. That's another thing that you could do. But yeah, once you've made this list, I want you to print it out and stick it on the wall. So I would not stick it on this wall, but over here I have another wall, and I would probably stick it over there, so that I can look at it every day. And I've actually already got stuff on my wall that I want to read every day. And it's really important that you do the same because it could be on your phone, but it's sort of hidden. If something's written on your wall, it's sort of hard not to read it, so it's really helpful. I get this question a lot with the new guys. Why isn't there more signals? I want more signals. We sort of covered this earlier, but I'll cover it again. So over the past 366 days, I would have done 365, but it didn't let me with this chart. We got 25 signals. So if you count all these up, it's not 25, because if you look over here, there's 2 sell signals. We only got 1, so I didn't want to count it as 2. So we got 25 signals. 25 signals over the course of a year is 1 signal per 14.7 days roughly. So once a fortnight, right, you get a signal. As you can see, if you're only getting a signal once every 2 weeks, it's quite a low time requirement system. And it's designed to be used on the high time frame, not for trading. You can use it for trading, as you can see, with a lot of the signals. If you longed or shorted with leverage, it was the exact top or exact bottom and you actually did make a profit. So you can trade with it, but I don't recommend it personally. And if you look closely, you can see that when we do get signals, they tend to bunch up, and then we have a gap. So we have like 1, 2, 3, 4, 5, 6, 7, 8 buy signals at the yellow here, and then we have nothing for like mid-July till start of September, so for quite a few months. And then we have a signal here, gap, 5 signals at the bottom, and then we go up, 2 signals at the top, but it's 1. So you can see it's spread out, right? You might have 2 months of nothing and then 5 signals in the course of a week. So that's just how it works. That's how good investing works. 90% of the profits are made in 10% of the time. Remember this. Most of the time, Bitcoin isn't really doing much. It's just in the middle of a trend, right? So we are here to catch the top and the bottom of a trend. And because we're only catching the top and the bottom doesn't happen very often. So that's why 90% of the profits are made in 10% of the time. And if you're here to satisfy a gambling itch, I don't really think this is the group for you. You're gonna have to go elsewhere. You're gonna have. If you need a gambling itch satisfied, go on like an exchange and just like, I don't know, do some leverage trading with something else. But don't don't try to satisfy a gambling itch with the algo. It's like the algo is the worst vice. It's like the worst implementation of a vice that you could ever have. It'd be like having a cigarette that you can only puff once every 5 minutes. Like, it's just frustrating. Like, you want to smoke it every 5 seconds, not 5 minutes, right? The algo was designed to not be for gambling. That I've purposely engineered it that way. So I don't recommend it. So yeah, we are here to remove you, yes, you watching this video, from your investing. We need to get rid of you from your investing so you can make more money, because you're the barricade. And when I say you, I'm also talking about me. I'm the barricade as well. I need to remove me from my investing, because I'm holding myself back from higher returns as well. From all those times that I didn't buy when I should have, from all those times when I should have taken profit when the market was greedy, from all those ICOs or NFTs that I should have gone in with conviction instead of just being complacent. If I removed me, I would have made way more money. So, and it's the same for you guys. So the biggest barrier between you and financial freedom is yourself. And it's also the same in business, right? If you're trying to scale a business from 10K to 100K a month, the only barrier is you. You're in the way of yourself. And the big thing in life is trying to get out of your own way. So that's why we make an algorithmic system, because it removes you. You don't have to think now. You just have to follow a system that works and implement it, and you're sweet. So humans are easily susceptible to reacting emotionally, right? Being too afraid to buy at the bottom when the algo signals because everyone's scared, and you've got that herd mentality that we talked about earlier. And these emotions, they seek into our trading and investing and affect our ability to buy and sell at the right times. And the idea behind an investing algorithm is to automate the decision-making process so that you don't have to worry about the emotions and all the bullshit. You just have to buy when it says buy and sell when it says sell. And that's the end of the mindset tutorial. Make sure you do this. Everyone watching, if you don't do this, don't expect to get the most returns from this system. You need to do this. This is really important. It will take you 10 minutes max. Everyone has 10 minutes. Print it on your wall. Printing it's really important. And yeah, any questions about this, feel free to DM me as well at any time. But yeah, that's the end of this section of the course. Hello everyone, welcome to Dan's Profit Hunter Guide, which is the official investment course of all the algorithms and the system attached to what you've just paid for. So I want to thank you all personally for watching this course and being here today. You have managed to stumble across, however you've managed to find me, the single most accurate investing algorithm and investing system on the market. Like, there is not a system more accurate than this that has been forward tested and actually works into the future. I've been testing this live for 8 months with live signals with a bunch of guys who already got inside early, and the signals have been close to it's been near perfect. So a lot of you guys watching this, you've just stumbled across the course, you've just been added to the group, and you just stumbled across the algorithm and you're wondering how it works, like is it real, is it actually like giving this accuracy of signals, like why does it work? Everything's going to be broken down in this course. I've literally, as you can see in the image here, it's going to be my brain downloaded into this video course, which is then going to be uploaded into your brain. It's going to be 4 years of intensive study with hundreds of hours of learning. It's going to be everything I've learned from my mentors and my network of guys worth several hundreds of millions of dollars who do crypto full time, who are literally become whales from being in the space. I know guys who literally started with $1,000 and are now worth 9 figures, and they made that from literally just investing. I know guys who have been doing proprietary and like trading-based algorithms for decades, and I've worked one-on-one with these guys to invent their systems, and also I've taken that knowledge and I've worked with a team of engineers to develop this system. So you might look at me, some young guy in an apartment, what does he know about crypto? There's a lot that I've done in order to create this system, and I'm going to be breaking it all down, and especially so in this first video, which is the origins of Dan's Profit Hunter. So I want to go over how I actually made this system, right? You're probably wondering, like, how did I make this? And there's actually an interesting story, and I decided why not break it down. And let's make this a little bit smaller to start off. You don't need to see my big head in the whole video. So I began investing in December 2017. Good timing, right? Literally at the exact top. And that was just after my 18th birthday. So I just turned 18 in November, and it was December. I just finished high school, and I just began investing, and I lost a lot of money. And that was during the entire first 2 years of my investing career, I guess you could call it. And I made literally every mistake possible, right? Buying too high, FOMO, greed, emotional trading, emotional investing, trying to place expectations onto the market that don't actually have any basis on reality, and literally every mistake. But the thing is, when you start something and you go through so much adversity and you make so many mistakes, great losses and these great mistakes actually mean great lessons learned, and it's what allows you to move on from this and become a really great investor / trader or whatever you're doing. You know, adversity is it's a precursor to success. It's inevitable. So I've made every mistake, and safe to say I don't have to make most of them again. Some of them I still make, unfortunately, but no one's perfect. Man, I wish this would... Yeah, there we are. So I've tried everything in crypto. I've been doing NFTs since 2018. Like, I was in Israel with my friends on a gap year. None of them knew I did crypto. I decided not to go to a movie at a cinema one night because I was literally minting this NFT that you see right here. It was called Pepe Dap. It was super shit. I think I made like $50. But that's an example of what I've been doing. That's a photo of my computer, my old computer from 2018, back when I was on Windows. And that was 2 NFTs that I owned. Frog McAfee, and that was back when McAfee was a big thing online, on crypto Twitter. And yeah, DeFi since 2020, trading since 2018, and ICO / pre-sales, or I mean IEO or ICO, whatever you want to call it, since 2018. So I've been doing everything. I've been here for a while. I've made a decent amount of money, especially considering my age, but I could have done a lot better. And one thing I've always had issues with, and I couldn't find a way around this until recently, was knowing to reliably sell near the top and buy near the bottom, right? This was my literal biggest weakness. Okay, I could trade. Okay, I could do NFTs and all this stuff. My biggest weakness was putting new fiat, new cash into the market at the right price and selling at the right price as well. And I was never able to find a tool that worked for me to allow me to do this, because I found that my emotions got in the way. I was impatient because I was young, trying to get rich quick, being an idiot. And I couldn't find a system that worked, right? I was all on crypto Twitter, all finding all the best resources, on-chain analysis. I was literally like all the on-chain stuff, all the sentiment stuff like the Fear and Greed Index and all the different tools. Good investors that you can sort of copy as well, I was trying to do, but that didn't quite work either. And none of it really worked in the way I wanted it to. I wasn't actually buying the bottom and selling the top as accurately as I wanted, right? So I actually made a discovery in late 2019. Excuse my big water bottle, it's a smoothie cup, but in late 2019, I actually discovered an investing tool called Funding. Now, a lot of you guys have never heard of this word funding. I want you to know that this is the single most interesting and important tool to understand why Bitcoin moves up and down like it does. So I discovered this tweet, this literal exact tweet here, and it says, remember how at 10,300 your Twitter feed was full of people talking about negative funding, yet the price still went up after? It's because funding is the primary source of social consensus on if Bitcoin is going up or down. It doesn't matter if people talk about it or not. Funding is a core part of the market. It's not biased or manipulated, it's just there. A situation where funding is a trap doesn't exist. So I read this tweet and I was like, fuck's this guy talking about? Who's this Loomdart? I mean, I knew Loomdart was cool, but I didn't know what he was talking about. I was like, oh, that sounds interesting. And yeah, so the rabbit hole begins. I've been researching ever since late 2019. And yeah, I spent hundreds of hours learning about funding for 2 years, literally 2 years of intense research trying to figure out what it meant. And in November 2020, I released, so it was around 1 year of, 1.5 years of study. So in November 2020, I released this guide. It's called Dan's Bitcoin Swing Trade Strategy. And this guide was a real workable investment strategy that used funding data. So I had researched funding, I'd found a system that I could use to implement it, and I put it in this guide basically. And there's a link there if you want to type that in. You can't click the link, but you can type it in if you want to find the guide. So I'm a little bit in the way here. Let's put this in the middle. After reading my guide, a developer friend / engineer, software engineer, he reached out to me in June 2021 with some interesting data related to funding. So as you can see here on the left, June 2021. Hi Daniel, working on a nice tool to expose the funding rates on FTX. And he said this was partly inspired by my attention to funding rates, and I didn't really find the tool useful, but I ended up asking him questions, and we talked a bit here on the right, and I said, you know what would be cool? A tool which uses funding and also the price distance from moving averages in order to create a dip buying algorithm. And I had the whole thesis mapped out of what I was trying to create, and this was, like 8 to 10 months ago, I think. So 8 months ago. And yeah, the whole thing was mapped out, and that was basically the idea that spawned the Dan's Profit Hunter system. Let's move this back down here. So Zane and I spent 2 months extensively testing, formulating, and automating the system which you see today. And 8 months later, which is right today, or not the 15th of February, I wrote that on the 15th, but today I'm filming this on the 21st, but probably releasing it later. We've actually created the single most accurate investing system to ever be created in crypto. And it's based on real data that actually affects the market. And we've got a community of hundreds of avid crypto investors who just want to simplify their investing. We've made students hundreds of thousands of dollars and got heaps of testimonials to back that up. Made me heaps of money as well from literally just being able to buy low, sell high using a proven system. And we've removed the emotional and time burden of the people who use the system, trying to find their own system. So it's an amazing system, and it's worked really well so far. So I introduced to you Dan's Profit Hunter, your unfair advantage in crypto, because it truly is unfair with what you're learning in here, because you won't find anything like this anywhere else. And so it begins. I think that's the end of this particular slide. So yeah, we got about 5 more videos coming up after this one, detailing everything you need to know. This was just more an introductory explanation video. But yeah, I'm super excited for all of you here today, and I hope you have a lot to learn over the coming few hours in this course. Cheers. Hey guys, how are we? Crypto Dan here with a brief professor introduction into myself, just so you can get to know me a bit more and how you can be making money from what I know, how I got to where I am today, and just, the basics of what you should know about me. And we'll keep this video pretty brief, a very short overview, just to keep it really high signal and low noise for you guys. So, who am I? I am a 22-year-old Australian crypto investor, currently still in Australia, but will be moving abroad in the near future. Been investing for 4 years. So I've actually been in crypto since I was 18, just after I turned 18 in December 2017. I've made and I've lost a lot of money along the way, but I've been doing crypto full-time for the past 2 years. And when you do something with such dedication of, that 10,000 hour requirement to become a quote unquote professional. I wouldn't call myself a professional because there's no professionals in crypto. But when you spend a lot of time on something, you become pretty good at it. So I hope that I can impart some of the knowledge that I've learned onto you guys. I'm definitely always learning every day, but there's a lot that you pick up from doing something full-time or mostly full-time for the past 4 years. And I've personally achieved location freedom, time freedom, and I'm actively working towards full financial freedom, which is 10 mil plus. Location freedom basically means you can work from anywhere. Time freedom means you can work when you want. And financial freedom means you can work on what you want and you don't even have to work if you don't want to. But I will always be working. That's the thing. So I don't have any uni degree. I don't have any trades. Don't have any certificates. I don't have any of that bullshit. Just literally just a passion for learning. So you don't need any of these certificates or any of this normal clown world bullshit. If you just have a genuine tenacity to learn and a drive, successful people will pick that up and they'll mentor you, or businessmen will work with you, or people will just respect you and want to learn from you. So it does, like, if any of you guys who are not doing a degree and you're not sure if you're not sure what you want to do, I was in uni for a semester and then I dropped out. And then I went on to make fuck tons of money in that same year that I dropped out, while everyone I knew got poorer and poorer during the easiest time to get rich in human history. So for as smart as people seem to be in university, a lot of my friends were actually incredibly dumb. So I'm just being honest here, guys. You don't have to do uni if you don't want to. You can achieve everything that I've achieved, which I still don't think I've achieved a crazy amount. I think there's a long way to go. But I'm basically trying to say you don't have to do the normal path. You can take a different path like Hustle's Uni, which is why you're all here. You want to do a different path, which is really great. So how can I actually help you make money, right? That's the important part. Let's get to the important shit. So I post signals in 4 different rooms that you can go into and you can follow and you can make a profit from. The first room is long-term investing. I don't post in here very often, but if I do, it's basically going to be, hey guys, look, I've got a new long-term investment. Here's my write-up. Here's how I'm accumulating it, etc. That's long-term investing. NFT calls is probably my most profitable room that you could follow. NFT calls is basically the room that I'm going to be posting NFTs that I'm buying. I've had a very high hit rate. We've made actually a lot of profits from the NFT space. It's been booming. And I don't even do NFTs, a full time. It's just something I've been helping guys with on the side, and we've made insane profits regardless. So as we get more into the NFT space and we have more expertise, I think we'll make even more money. So I'll be running through some of the calls that we've done later on in this video. And medium-term swing trading. So this is my momentum-based trading strategy, not to be mixed up with Adam's trend following strategy. Mine's a little bit different. I do, when the market is in a really easy moment to trade, I do what's called swing momentum trades. And a momentum trade is where I can see a coin is breaking above its all-time high or it's breaking above a key level, and I basically just look to buy the retest and ride that up. And I'm looking for coins that are showing strength versus weakness. And I explain all of that in the room and in some of the educational materials as well. And it says Dan's Ultimate Hunter Algorithms. That's the full thing. And that's medium-term swing trading. Dan's Ultimate Hunter Algorithms is the single best investing algorithm on the market. You only need to input about 1 hour per month of time, and you will get out entries near the bottom and near the top for most cryptos in the market. And it's the easiest thing to follow in Hustle's Uni. It's the easiest way for you to make a profit. I recommend everyone at some level use this algorithm. It's been incredibly accurate since we've launched it in Hustle's Uni towards the end of last year. We've done amazingly well, buying basically every exact bottom and selling every exact top. We've done very well, and I'll show you a chart with some of the signals we got. And also we've got some videos covering education on how to use the algo. So I won't go too much into that in this video because we've got a lot more explained in other videos. So here's some notable signals. The first one was, this was towards October last year, I think, Star Atlas IEO. So an IEO it's an initial exchange offering. It's basically where an exchange in crypto decides to help a new project launch, and so they allow people who use their exchange who fit certain requirements to buy this new token for a really cheap price as a reward for saying, hey guys, look, you use our exchange, you met the requirements, you are allowed to buy this token, and this is a thank you. And so some of us got lucky, we met the requirements, we got the IEO, we put in, the maximum amount you could buy was $500, and yeah, we put it in next day. The coin's Atlas was trading at 50x returns. So yeah, $500 into 25 grand in a day. So pretty good. Meerkat's NFT. This was the first NFT that I bought, and a lot of the guys actually got this one. It went from 1 sol when we minted it so you could have bought one of them, you could have bought 10 of them. It depends how fast you were. And if you bought one, you made a minimum 30 Solana profit, which is around $20,000 in a day. And I told everyone to sell that at the top, so we did really well there. And another one was Metaverse. This was the best profit flip we've done on NFTs. I told literally everyone I knew, you have to buy the Mechaverse. It's meant to be Mechaverse, not Metaverse, sorry. I told everyone, you have to buy the Mechaverse NFT. I got as many people on board as I possibly could, and the guys who got it, they made about $20,000 to $40,000, depending on if they minted 1 or 2. Anyone could have minted 2 if they got picked. So some guys only minted 1 because they were silly, but yeah, if you minted 2, you made $40,000. You made an average, you made just a below average US salary in a day from literally just listening to what I said and doing basically nothing. It took like an hour of work. So that was another really good one. And Hunter algorithms. We got some really good bottom buys and some really good top sells. These are the signals we've had since Hustlers Uni has launched. You won't see this sell signal in the chat. We had issues with it, but it is valid. You will see this one, you will see this one, you will see this one, and I think you will see this one, I'm not sure. But these are all forward tested, as in I created the system and launched it here, and these are all the forward signals. So as you can see, buying the exact bottom, selling the exact top, buying the exact bottom, selling the exact top, and then a faulty signal here where we only put a little bit in, and then buying the exact bottom again. So yeah, the Hunter algo is literally the best investing algo on the market, and I highly recommend you at least research this. If you're a guy with a lot of time, NFTs are great as well. If you can really get into the research and get up to scratch on what you need to know how to buy NFTs and make a profit. And IEOs, these are very inconsistent but very profitable ways to make money. They will be posted in... so there's another room. It'll be posted if there's ever one in Crypto Plays. But I don't really post in there very often. That's why I haven't included it here. It's not really my room. But let's say an IEO came up, I'd post it in there. But very rare. So, that's the whole video. And that's me. As you can see, lots of fucking money to be made, guys. Maybe not as much in the 2022 market, but there's definitely still going to be profits, still going to be some NFTs, still going to be the Hunter algo, buying bottom, selling tops. Still a really great time to be in Hustlers Uni. So I really am stoked to see you guys get in the chats and see your names around. So talk soon.
All right, so in this video, we're going to be talking about specifically how to run the cold email campaign. Now, I'm not going to talk in this video about how to find prospects. I have some other videos that are going to be coming after this that are going to show you how to find prospects on places like YouTube, Instagram, Google Search, LinkedIn, etc. There's a lot of different ways to find prospects, but once you have those leads mapped out, I'm going to show you how you go through and reach out to them in a way that's effective, that is going to get you that discovery call you need so you can set up a discovery project. So, something to keep in mind, I'm going to be sharing templates with you. If you copy and paste these templates, if you don't put any effort on your own, it's going to come across as very unique. There's a good chance that perhaps someone you reach out to may have seen this exact copy and paste template before, right? you're going to want to adapt it to match your voice and to match your situation, right? You want to keep the same elements in there, but change the wording so it doesn't come off as a copy and paste. Because again, you want this to come off as personalized, right? That's the whole point of this. And that brings up another good point. This is not something you just copy and paste to thousands of people. We're not going for volume. We're going for quality, right? We're going to reach out to we're going to find the best prospects we can in our search, and then we're going to send them a personalized message. Now, we are slightly templatizing it so that we can still scale. We can still reach out to more people than if we wrote the message by hand every single time. And there's some plugins to help do this, but I'm going to show you the variables you want to do. But you're going to also want to adapt the template to your own language, right? So let me read the template, and I'll go through the process. So the first message you send to somebody, you're going to have a subject line. In a second, I'll talk about how you come up with the best subject lines. But this is the body of the template. So I'm going to read through it, and I'll go through the parts. So you say, hey there, first name. So you insert their first name. Again, there's a tool called Streak that I highly recommend that will allow you to insert variables into mass messages you send out to lists of people, right? And so you say, hey there, first name. Hey there, Steve. And then you give them a specific compliment. Now, this is the part that's going to take some time while you're actually like searching for clients. You need to sit down and come up with a specific compliment. If you say something like, I really liked your last video about how to improve grip strength for rock climbing, those exercises for how to improve grip strength for rock climbing, I can see that'd be really useful for your audience. I know that's something they really care about. Let's say that's your specific compliment. Next thing you say, I was looking over your site and had an idea for a way you could increase your sales for your weight training. You insert the name of the product, your weight training for rock climbers course. I actually went ahead, put together a 3 email sequence for your list to drive traffic to that course. I'm curious what you think about it. Would you like me to send it over as a gift? And then you sign off with your name, right? So the way this works is you're starting off with a unique compliment, and the reason you do that is, and a rule of thumb with a unique compliment is you want this email to only make sense in their inbox, right? If this email is something that could make sense in anybody's inbox or their competitor's inbox, it doesn't feel like a person. You want this to feel like one person reaching out to another with a free gift. That's the whole vibe you want to create here. So with your compliment, I like to make it as specific as possible, about something as recent as possible. For example, a recent social media post, and I like to tie it into how it relates to their audience. That way, you can avoid the trap of coming off as a fan, being like an inferior. You want to come off as a peer, or at least even a superior marketer, right? So you want to come in and say, hey, I can see how I can tell that's something your audience really cares about. I'm sure they really appreciated the content. Anyways, once that specific compliment's there, then you got to tell kind of a story. Hey, I was looking at your site, I saw your course, and I had this crazy idea for a series of emails, or a couple of Facebook ads, or some new headlines you could test. You're limited to your creativity. Emails is generally a pretty good way to go, but you suggest that you came up with an idea of this free small piece of copy. Again, it's something you should be able to knock out in less than an hour, right? But it's something that if they could use, they literally can use it to make sales, right? You're showing up with a gift in hand, right? It's like you show up to a housewarming party, you don't go empty-handed, you bring a gift. Same thing here with this outreach, right? And then you say, okay, I went ahead and put this together. You put it together when you get there. They get it at the same time. Doesn't super matter, right? I'm curious what you think about it. Would you like me to send it over as a gift? Again, you're framing this as a gift. This is free. This is me giving you value. You want them to know that from the get-go. You don't want them to think you're trying to sell them something. Say, hey, would you like me to send this gift